Hi, it is Thursday morning, 19th of September. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
Turning our attention to the broader market, the S&P 500 also closed in the red, down 0.3% to finish the day at 5618.3. This downturn snapped a 7-day winning streak for the index. The tech-heavy NASDAQ wasn't spared from the selling pressure either, slipping 0.3% to close at 17,573.3, ending its one-day stint in positive territory. Despite these losses, it's important to keep in mind that we're looking at a single day's performance within a larger market context. Investors should consider their individual investment horizons and risk tolerance before making any decisions based solely on short-term market fluctuations. Now, let's delve into the performance of some tech giants. Apple continued its upward trajectory, closing at $220.70, marking a 1.8% gain for the day and extending its winning streak to 2 consecutive days. This positive momentum suggests continued investor confidence in the tech giant. Meanwhile, Google also closed in the green, reaching $159.80, although a more modest increase of 0.3%. This marks the 6th consecutive day of gains for the search engine behemoth, indicating sustained positive sentiment. However, it wasn't all smooth sailing in the tech sector. Microsoft bucked the trend, closing at $430.80, reflecting a 1% dip. This downturn snapped a 7-day winning streak for the software giant, highlighting the inherent volatility even within a generally positive market environment. This negative movement for Microsoft comes despite a generally positive trend over recent periods. The tech giant saw a 1.8% increase over the past 5 days and a solid 3.3% gain for the month to date. Zooming out further, Microsoft has enjoyed a 15% surge since the start of the year, underscoring its overall strength within the market. It's also worth noting that despite yesterday's dip, Microsoft has still recorded gains in 7 out of the last 10 trading days. This context is crucial for investors, reminding us that short-term fluctuations are a normal part of market behavior. Amazon rounded out the major tech players, closing at $186.40, a slight dip of 0.2% for the day. This reversed the e-commerce giant's previous day's gains, reminding investors that even industry leaders can experience short-term fluctuations. Meta, on the other hand, continued its positive run, closing at $537.90. This represents a 0.3% increase, marking 3 consecutive days of gains for the social media company. This upward trend suggests growing investor confidence in Meta's future prospects. Nvidia, however, couldn't escape the selling pressure, closing at $113.40. This translates to a 1.9% drop, extending the chipmaker's losing streak to 4 consecutive days. This recent downturn might have some investors concerned, highlighting the volatility that can be present even within a high-growth sector like semiconductors. This negative momentum stands in stark contrast to NVIDIA's performance since the start of the year. The chipmaker has enjoyed a staggering 129% surge since January, underscoring the potential for volatility even within a high-growth sector. Despite the recent downturn, it's important to note that NVIDIA has still recorded gains in 4 out of the last 10 trading days. This serves as a reminder that short-term fluctuations are a normal part of market dynamics, and investors should avoid making impulsive decisions based solely on daily price swings. Let's shift our focus now to the financial sector, where it was a mixed bag yesterday. Bank of America outperformed its peers, closing at $39.60, a 0.2% gain. This marks 3 consecutive days of gains for the bank, suggesting some resilience in the face of broader market pressures. However, JP Morgan didn't fare as well, ending the day at $207.50. This represents a 0.8% dip, reversing its 2-day winning streak. Similarly, Morgan Stanley experienced a setback, closing at $99.30, a 0.5% decrease, marking 2 consecutive days of losses for the financial giant. Turning to the payment sector, both Visa and MasterCard felt the heat. Visa closed at $288.50, reflecting a 1.1% decline and snapping a 4-day streak of gains. MasterCard, meanwhile, ended the day at $494.80, a 1.2% drop, which reversed 7 consecutive days of gains. This suggests that even within a specific sector, individual companies can experience divergent performance. The financial sector, much like the tech sector, often serves as a bellwether for the overall market sentiment. Yesterday's mixed performance underscores the uncertainty and volatility that can characterize the financial landscape. Investors should remain vigilant, carefully assessing both individual company performance and broader economic indicators. This positive short-term trend for Bank of America is encouraging, especially considering the bank's performance over the past month. Despite a slight dip of 2.1% month-to-date, the bank has demonstrated resilience, managing to stay in positive territory with a 20% gain since the start of the year. This overall positive trajectory, combined with its recent gains, might signal to investors that Bank of America is weathering the current market uncertainty relatively well. Now let's turn our attention to the cryptocurrency market, where digital assets are painting a green picture. Bitcoin, the world's largest cryptocurrency, closed at $61,941.20, a significant jump of 2.7%. This marks 2 consecutive days of gains for Bitcoin, suggesting renewed investor interest. Similarly, Ethereum, the second largest cryptocurrency, also closed in positive territory, reaching $2,405.20. This represents a 2.7% increase, mirroring Bitcoin's 2-day winning streak. This synchronized movement suggests a broader positive sentiment within the crypto market. Dogecoin, often considered a more volatile and meme-driven cryptocurrency, wasn't left behind in the rally. It closed at 10 cents, a notable gain of 2.9%. This marks 2 consecutive days of gains for Dogecoin, indicating that even the more speculative corners of the crypto market are experiencing renewed enthusiasm. This recent surge in Bitcoin's price is a welcome development for investors, especially considering its performance over the past month. Despite a slight dip of 5% month to date, Bitcoin has shown resilience, boasting a 47% gain since the start of the year. This overall positive trajectory, coupled with its recent gains, might signal to investors that Bitcoin is regaining its footing amidst the current market volatility. Ethereum's recent performance also paints a positive picture. The cryptocurrency has seen a 5.2% increase over the past 5 days and a solid 2.8% gain for the month to date. Zooming out further, Ethereum has enjoyed a 39% surge since the start of the year, underscoring its overall strength within the crypto market. Dogecoin, despite its volatile nature, has also shown resilience. The meme-inspired cryptocurrency has gained 4.1% over the past 5 days and an impressive 10.5% for the month to date. While its year-to-date performance is relatively flat at 4.8%, its recent surge suggests renewed investor interest. The cryptocurrency market, much like the stock market, is prone to fluctuations. However, yesterday's performance, particularly the synchronized gains of Bitcoin and Ethereum, suggests a potential shift in sentiment. Investors should remain cautious but optimistic, carefully monitoring market trends and conducting thorough research before making any investment decisions.